Guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys can go ahead and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. And if you guys could share my videos and share my channel with anyone, I'm trying to grow my channel as much as I can, and I definitely need you guys' help in doing so. Getting started, today's gonna be Sunday, March 12th. This video is gonna be dedicated to strictly the Silicon Valley Bank collapse, how it's going to affect or has affected the cryptocurrency market, stock market, what the federal government might be doing about this, as well as we're gonna talk about our just trustworthiness and the faith in the banking institutions as a whole with this. So I'm going to be coming out with another video later tonight about everything else related to the financial markets. This one is going to be strictly designated to the Silicon Valley Bank collapse. So getting started though, the market cap is $984 billion, and we're going to leave it there. We'll talk about the rest in the later video, but I wanted to point out with this though, USDC coin right here. Coin is supposed to be pegged to the digital dollar. It's a digital dollar, so it's basically pegged to the US dollar. It is down below a dollar right now. Now it normally fluctuates between $1.01, so $1.01 to 99 cents is how it kind of just fluctuates. So it's not by much, but it did fall drastically below that. It did fall to 87.9 cents. So this shows that right now we just need to figure out how we can keep these digital dollars pegged to the US dollar, because we can't have a bunch of people have a faith in a cryptocurrency, especially having a stable coin that technically isn't stable. But the reason why this happened was because Circle had a bunch of money inside Silicon Valley Bank. So they came out and issued a statement saying that following the confirmation at the end of today that the wires initiated on Thursday to remove balances were not yet processed, 3.3 billion of the 40 billion of USDC reserves remain at Silicon Valley Bank. Like other customers and depositors who relied on Silicon Valley Bank for their banking services, Circle joins calls for continuity for its important bank in the United States economy and will follow guidance provided by state and federal regulators. So they had a bunch of money in their reserves to back their USDC that were issued, and then now $3.3 billion is essentially lost. So with this, though, Circle did come out and say that Silicon Valley Bank is one of the 6 banking partners Circle uses, managing the 25% portion of the USDC reserves held in cash. While we are waiting clarity on how the FDIC receivership of Silicon Valley Bank will impact its depositors, Circle and USDC continue to operate normally. So, as of right now, Circle has come out and said that they have the reserves, even if their executives need to pull it from the company. They have the money to basically back the dollars that essentially are still with the bank. Coinbase did suspend their transactions. So it says we are temporarily pausing USDC-USD conversions over the weekend while banks are closed. During periods of heightened activity, conservations rely on USD transfers and the banks that clear during normal banking hours. When banks open on Monday, we plan to re-commerce conversions. Now, your assets remain safe and available on the chain sends. Now, in my opinion, I don't really like this. I don't believe that a company should be able to stop or suspend transactions that are supposed to be going 24/7. With banks, you kind of knew what you were getting into. You knew that you can only operate during banking hours. Cryptocurrency is supposed to be 24/7. And for an exchange to basically say, like, oh, you're not allowed to cash out until Monday when the banks open, I don't really like that, in my opinion. I think this is wrong for Coinbase to do this. Now, this guy comments right here, says, yeah, you mean if banks reopen on Monday. Now, I don't, again, trust the banks. I don't trust companies that do this. I do like Coinbase as a company. I think they are the most user-friendly cryptocurrency exchange. Now, they're not my favorite, but I do believe they're user-friendly, and they're trying to do this to help their customers in a sense and kind of bring clarity what's going on with USDC, and hoping that it basically gets repegged back to a dollar. But in my opinion, it's totally wrong. But we're going to move on past this. I wanted to point this out, though, that people still do lose money on stable coins. It's no difference, though, if you held a regular dollar and then with inflation, your dollar gets less value. It's, in my opinion, it's kind of the same thing, except it didn't need a bank to collapse for this to happen. Um, for the USDC to get depegged from the regular dollar. But with this though, this was kind of crazy and this was kind of interesting for me when I was looking in doing a bigger deep dive into this. Only 2.7% of the Silicon Valley bank deposits are less than $250,000, meaning 97.3% aren't FDIC insured. Ouch. Now, I created a TikTok video on this because I thought it was kind of crazy. And I also talked, and we're going to get over into the next tab and we'll talk about this. But the federal government only basically insures $250,000 for each person. Now, $250,000 is a lot of money. I wish I had $250,000 for them to insure if I did lose money. Now, I didn't bank with Silicon Valley Bank. Um, but if I did, I'm glad that banks do, or the federal government does insure up to $250,000. But those individuals who have more than that, okay, a lot of these companies or people were startups that invested in Silicon Valley Bank, or not invested, but held their funds in the bank. Now, that money isn't technically FDIC insured. So if a startup gets, $1 million as an investment from several different people, and then they try to grow their company and they trust this bank, and then now the bank goes under, they lose all of that money. Now, with my TikTok video that I posted, a bunch of people were commenting that the assets aren't technically lost. People, are going to be able to get their stuff back, get educated. It's like, it's right in front of you guys. You guys can see this. You guys can do your guys' own research if you guys don't believe the things. Or, he's one of the guys was commenting saying, oh, the money's technically there, it's just in a loan. Yeah, but if I had $1 million in this bank, right, I'm only going to get $250,000 back from the federal government that's insured. That other $750,000 is lost by me. Whether that money is in a loan or whatever, I'm not getting that back unless the federal government steps in beyond what the FDIC insures. So we'll wait and see what happens. And that's what I want to point out with you guys, is that you guys need to have faith in the banking institutions. But if these big banks are collapsing, it just blows my mind. At the time, Silicon Valley Bank was the 16th largest bank in the United States. With it being the 16th largest bank and it collapsing, this is the second largest collapse in US history for a bank. Now, we need to be able to trust these organizations and these institutions. But when this happens and we have these big collapses, that could have been avoided. And the reason why I think that they could be avoided is because people knew about this, in my opinion. Again, no financial advice, but they knew about this. Right here, it shows that Silicon Valley Bank CEO, CFO, and CMO sold $4.4 million of stocks in the last 2 weeks, but they didn't know anything, right? So these are the transactions right here. Their CEO, Gregory Becker, sold $3,578,000 worth of stocks in the last 2 weeks. Their CFO, 575,000, and then their CMO, $292,000. Now, why would they be selling these stocks? Now, was it a time sell? In my opinion, that's way too much money to be a time sell of a stock of a company that's going under 2 weeks later. So, was it coordinated? We still have to figure out. These people need to be investigated. There needs to be a big federal investigation into this bank and what went wrong. Getting more into this, Silicon Valley Bank's chief risk officer was managing director at Deppeged Bank during the 2008 crisis and led credit ratings in 2007. Failed to plan to fail. So she was involved with a lot of stuff that happened that was basically really bad during the 2008 financial crisis. And then now she was the chief risk officer and was the managing director during the crisis, and basically failed at her job then, but then they hire her to be the chief risk officer, and then this bank collapses. In my opinion, this girl needs to be investigated also, because what's going on? How is your chief risk officer does not figure out all of this stuff before it happens, before it goes bad? Unless the CEO was doing stuff behind her back, or the executives in this company were doing things behind everyone's back, this is just ridiculous. And then on Watch Your Guru, the Silicon Valley Bank CEO delivers his messages to employees, basically saying that he's sorry that this happened. He doesn't know how it happened. Hopefully the FDIC can get this figured out. Hopefully somebody can basically buy them up and recover whatever assets are left. In my opinion, this was very distasteful. We just saw right here that he sold almost $3.6 million worth of shares, but then apologizes in this little message right here for a video. It's only 2 minutes and 23 seconds. I would highly recommend you guys watching this video, and again, everything that I'm talking about is going to be posted in the comments. But truly listen to the words that he says and see if they're sincere. Okay. Because in my opinion, they weren't sincere. He was doing this behind closed doors. He knew what was going to happen. He knew this bank was going to collapse, but did nothing to stop it and was getting rich off of it while it was happening. And one of my other comments for the video that I talked about was the bank collapsing on TikTok, and then also the CEO, CFO, and then the CMO basically selling a lot of their shares. Somebody commented and said all banks are at fault for doing this. At the time, you have to really look at Biden and his administration and his plans. But none of that had anything to do with Silicon Valley Bank collapsing, right? And you can't blame all banks, okay? Yes, all banks right now, I'm sure that there's doing stuff to get rich quick and stuff like that. But those banks have not failed. Silicon Valley Bank did. So to blame other banks for this collapse is completely wrong. We need to look at this bank and this bank only with what happened. So I highly encourage you guys to watch this video. Now, the FDIC auction for Silicon Valley Bank is kicked off with the final bids due Sunday. Who will it be? So basically what's happening is institutions, other banks and stuff can basically auction, put in a bunch of auction prices, try to bid at this and see what they can recover from Silicon Valley Bank. Again, if this does come out, we'll talk about what happens in the next video. That's going to be later tonight. If for whatever reason this auction does end and they actually release who did it. Getting into more of this though, Silicon Valley Bank paid out annual bonuses to eligible U.S. employees just hours before the bank was seized by the U.S. federal government. I feel sick, and I completely agree with this. So good on Gold Telegram for posting this, because it's really interesting to see that just hours before the bank was going to be seized, annual bonuses were given out. We're in March. What annual bonuses would have been given out? Normally they give out in probably December, maybe January for the previous year. Again, I'm not in the bank, so I don't know officially if March is considered the banking year. If it is, put it in the comments. I'd like to know. I'd like to get a little educated sometimes if you guys are knowledgeable in that. But to give out these bonuses and a few hours before your bank is seized by the government, you knew something was wrong. You decided to pay your employees. And which employees are you paying? Because normally it's the exec team that gets paid off by these big bonuses. So again, this needs to be investigated. Ro Khanna, the U.S. Treasury Department and FDIC must communicate loudly and clearly that depositors will be protected. The investors and executives of Silicon Valley Bank should bear risk and lose. This should not mean that workers go without paychecks on Monday or small businesses to collapse. And this is what I was talking about, that a lot of people were, especially small startups, in Silicon Valley, put their money into this bank. They trusted this bank to keep their money safe. And obviously they did not. Whatever happened with this, whatever money that was being funneled out of this, where did it go? How did it disappear so fast, especially for the bank to collapse in the time period that it did? Getting in more into this, the Federal Deposit Insurance Corp and the Federal Reserve are discussing to creating a fund to backstop deposits if more banks fail. Now, this is really interesting because we are going to wait and see on Monday what happens to other banks. This is why I want you guys to look out for. But we're going to look at Janet Yellen. So she came out today. I forgot to, get something on this, but she says that the federal government won't bail out Silicon Valley Bank. So the federal government's not going to step in and basically forgive everyone who ended up depositing money into Silicon Valley Bank. And I 100% agree with this. Not every person should be able to get their money back, but because the federal government in a sense can't do that. Okay, when something like this massively happens, these big corporations should not be able to get all of their money back because they trusted this company with X amount of dollars. But mainly the people that need to get their money back are consumers, your average Joe who holds over a little over $250,000, and then small businesses, because they help support our economy. Okay. Now, these big corporations, do they deserve some of their money back? 100%. They just, in a sense, they technically deserve all of it. The CEO, the CFO, the CMO, the chief risk officer, and any other exec who's, complicit in this, deserves all of their money that they've gotten, bonus checks, whatever they've been paid previous years. That money needs to be brought back into the bank. And until all those debts are paid, those individuals should not become these get rich quick schemes, stealing investors' money and then serving no sort of punishment. They need to be investigated. They need to either go to jail, be paid a fine, or figure out a way to save whatever assets are left and get that money back to those individuals who did lose money. Because, in a sense, they're the ones that bear all the blame, and it's not the average person and it's not the small businesses who invested or stored their money in the company. Now, CZ for Binance says pure speculation, but it almost feels like there's a coordinated effort to shut down crypto friendly banks. And that's what Silicon Valley was. It was a crypto friendly bank. But the result of this, banks are shut down, but blockchain is still running. As we can see, we've talked about this. Cryptocurrency is up 4.27% on the day. If we look at the week, though, we still are in the red overall, depending on which cryptocurrencies you are. But they're still running. I can still buy, sell, trade any cryptocurrency that I want to. But if I had money in Silicon Valley Bank, it's gone. Now, David Schwartz ended up releasing a thing right here in this little thread. Quick question. Though, are you guys solvent? So he's asking Circle if they're solvent, and they need to figure out if Circle technically has enough money. Did they have as much as they said inside Silicon Valley Bank? Or if the people decided to pull all their money out of USDC, will it get even more depegged from the dollar than it currently already is? Now, it did recover from the 87.9 cents to roughly about the 97 cents right now. But if more people decided to sell their USDC for the regular dollar, the physical copy that you store in a bank, would they be able to give those funds back? That's what he's asking right here. And then this guy, Shorter XBT, asked David Schwartz, does Ripple have any exposure? And he comes out and says, we're going to issue a statement. I can't really say anything until we do that officially. So we're going to figure out what happens in my video. Hopefully by then, they will release a statement, especially because this was over 24 to 48 hours ago that this was actually said. And I just recently noticed this, so I wanted to point this out that, in my opinion, Ripple did have some exposure in Silicon Valley Bank. How much, though, is to be seen. But in my opinion, if they had exposure with this, in a sense, it does hurt their company as itself, but it does not hurt the XRP token because the XRP token doesn't necessarily need Ripple to function. But it does help that Ripple is there. Now, the Ripple has so much money in escrow that I want to point out with the XRP token. So all that money in escrow, if Ripple really needed money, when it pulls money out when it pulls the XRP tokens out of escrow to sell to run the business, in my opinion, they still have a lot of money that is still left. Now, could that hurt the XRP token, flooding the market with those XRP tokens if Ripple decided to do that? Yes, 100%. But I think Brad Garlinghouse, David Schwartz, and Chris Larson are a lot smarter than that. But I wanted to leave that here. Make sure you guys tune into the later video tonight. If you guys have any questions or comments or concerns, things you guys want me to answer in the later video, make sure you guys put them in the comments below. If you guys can't invest with the big dogs, stay on the porch. Thank you and have a good one.